Hello and welcome to the first section in the GILD program. And this is all about context. And by context, I'm really referring to the context of the investment ecosystem, which is really what led us to where we are today and how you can take advantage of the system that has changed dramatically over the last 50 years. And you can, instead of kind of trying to follow best practice from 50 years ago, you can skate to where the puck is going. So you can get ahead of the curve here. So I didn't want to get straight into the content about how you build an investor network until you understood the wider landscape, because then the content around building your investors and who you choose to connect with will make a lot more sense. So let's crack into this. As you know, this is part of the 5 C's that make up the GILD program. Today we're going to talk about understanding the market, and then we'll talk about how you use new methodologies to build your investor network. Then we'll talk about the connections, the people you actually need to be connected to, how you connect to them, how you create enough value that they want to be in your network, how we structure the deals, how we construct them, and then how we build ongoing relationships so that this isn't a one-time deal, but this becomes you become sort of a constant magnet for opportunities. So the people that I'm going to bring in to talk and to give you some content over the coming months are going to be people that will give you context for subsections of the investor base. So we'll be talking to some angels, we'll be talking to some venture capitalists, some private equity, some debt, some real estate, equities, and general economists around what's going on in the economy. Now, this is one of these areas. Normally, I would be somebody that would be very much advocating for you becoming a master of your niche. And we will get onto that because you do need to become a master of your niche, whichever area you choose to be focused on. That's the area that you need to be known for. However, because of the nature of GILD, because we're going to be looking at opportunities from across this whole ecosystem, you also need to be a bit of a generalist. You need to be able to have a conversation with an angel investor about what's going on in the startup ecosystem, as well as somebody that's in the equities field, for example, about what's going on in the S&P 500 right now. So part of what we're going to be trying to do is to give you that background knowledge. So you don't need to be an expert in these things, but you do need to be able to hold a conversation so that you can then have the credibility to introduce them to somebody that might be able to do a deal with them. Look, the traditional approach to raising capital is the way that I did this for many years. It's the way that if you've read anything or watched anything about Silicon Valley, how to raise money, it's all very much about come up with your unique selling point, create a very sexy deck, and then go out and knock on doors. And basically, if you knock on enough doors, eventually you will find somebody that is just sitting there with a checkbook ready to write you a check. Now, this is incredibly soul destroying and frustrating to do. And I think most of the advice around how to raise capital is generally done with good intentions. People are trying to help you. There's definitely advice out there that isn't so well intentioned. It's really about, well, the best way to raise capital is to spend 20,000 euros and come and stand on stage and we'll put you in front of investors. And later on in the program, I'll explain why that doesn't work, but also why you might still want to do it, even knowing that it doesn't work. And I'll talk about that later. Look, I mentioned this right at the beginning. This is probably kind of why you're on this program, but things have changed significantly in the investor base. Now, I'm not sure how old you are. I'm nearly 50. And I remember being a kid and companies IPOing was a really big deal. It was very exciting when a company went public. And this idea of, for example, being able to get hold of Microsoft stock, which was this fast growing company. Everyone was super, super excited. And in fact, when companies didn't go public often enough, governments would get upset. Governments would say, well, look, how about, the average retail investor, the mom and pop investor, they're not getting to benefit from these private companies. We want our companies to go public. And so it's quite exciting, and people wanted to buy stock. Now, that was 40, 50 years ago. The game has changed completely. Now there are so many opportunities out there. I mean, the biggest companies in the world, the Googles, the Facebooks, Apples, they are trillion-dollar businesses that are growing at 25% a year. They're sitting on 100 billion in cash. Share prices have gone astronomical over the last 5-10 years. And so every investment opportunity is compared to that. As an investor, I've got that opportunity. I could also invest in investment tracker funds, which have gone from nothing to a $7 trillion industry over the last 30, 40 years. Plus, every man, woman, and child is out there raising money for startups. And so you've basically got people that are investors are overwhelmed with opportunities. And so for you to come out there with a deck and start knocking on doors and saying, hey, I've got this wonderful opportunity, just this idea that investors are sitting there waiting for great opportunities to fall on their lap, it doesn't exist. And so what's happening is investors are only going into deals where they have a high degree of confidence that they're going to get their money back, that they're going to get their return. And that doesn't come from a stranger cold emailing them or knocking on doors. It comes from the trusted network. So this is the new playbook moving forward. Now, it really annoys me to have to use this analogy. If you've spent any time on LinkedIn, you will have seen a variation of this. It's this idea, an apocryphal story about an alleged professor that basically takes hundreds and hundreds of balloons, puts them in a school hallway. Each balloon has got a kid's name on it. And the professor says, right, go and find the balloon with your name on. And of course, chaos ensues as kids are knocking balloons and each other out of the way and chasing for their balloon, and nobody can find their own balloon. Then the professor repeats the exercise, but this time he says, pick the first balloon that you find and go and find its owner. And now what happens is it's very, very easy. People know who to ask and who to talk to, and suddenly the balloons get given to their rightful owners. Now, depending on who you see demonstrating or who you see posting this analogy or this story, some people claim this is how you find joy in the world, by giving joy to others, or this is how you find good supply chain management professionals by whatever, right? Everyone uses it to their own particular examples. Annoyingly, it's absolutely perfect for what I'm trying to articulate, which is most of us, when we go out looking for money, when we go out looking to raise funds, we have our name in mind. So when we come across these investors, if they're not right for us, we kind of knock them out of the way and keep plowing through, trying to find our own balloon, our own one investor that will love our story and want to invest in us. And the whole idea of GILD is that we go the other way, is that rather than having this obsession with our own balloon, with our own opportunity, actually we start looking instead at the bigger picture, and we start saying, oh, I noticed that you're investing in real estate. Let me connect you with somebody that's got real estate deals. Or I noticed that you're into crypto. I know someone over here that's got an amazing network of crypto opportunities. So let's put you together. And this is much more civilized way of doing it. And obviously there's far, far more opportunities. And so this is kind of, it annoys me that this analogy is so good, but it is a good thing to keep in mind when you're going through this program, is that if you're just out there looking for your own balloon, you're going to miss tons and tons of opportunities, and it's very, very difficult to find your balloon. If you go out looking to help other people find their balloon, suddenly it becomes all much, much easier. So it really annoys me that this works so well, but it does. Look, again, I mentioned this in probably the intro video that you saw. This is an actual screenshot taken from a court case with Elon Musk talking to his friend Larry Ellison, two of the wealthiest, or certainly in the top 50 wealthy people in the world. And this was when Elon Musk was looking to buy Twitter, and he sends a text message to Larry Ellison saying, any interest in participating in the Twitter deal? Larry Ellison replies, yes, of course. Elon says, roughly what dollar size? Not holding you to anything, but the deal is oversubscribed. And Larry says, $1 billion or whatever you recommend. Elon recommends 2 billion. Now, what's interesting about that, there's no knocking on doors, there's no pitch deck or involved business plan. It's people that trust each other to deliver results. And actually, while the numbers might be a lot smaller, you'll find that that is how most investments are being done in the private sector. They're being done from connections like this. And if I look at the last dozen or so investments that I've personally done, pretty much all of them have involved some variation on a message like this. Or it might, if it's not the individual's company, it's a company they've just invested in. They're letting me know that there's an opportunity that's open, but I know them and I trust them, and I know they wouldn't put a deal in front of me unless it was something that they believed in. So this is what we're trying to get to. This is this idea of building these trusted relationships. One of the things that I would strongly encourage, if you're not already an investor, is that you become an investor. So that might mean that you buy some stock in a public market. So you open a brokerage account if you don't have one. It might mean that you put a small amount of money into an angel investment. Now, I'm not suggesting you do this to make money. I'm suggesting you do this to understand your target market. So one of the things that really shocked me when I got onto the boards of companies and public companies was how many directors didn't own stock. They not only did they not own stock in their own company sometimes, but they just weren't investors. And I thought, well, how can you represent the interests of investors if you don't understand what it's like to be an investor? Now, what it's like to be an investor, it can be pretty horrible. It takes a long time and a lot of effort to earn money. And then you're trusting that whether it's Elon Musk at Tesla or the guy down the road that's starting the restaurant that you're investing in, that these individuals are going to take care of your money and going to give you a better return than if that money was to stay in the bank. And that's the whole game. But until you've actually been an investor, until you've lost money or you've seen your money depreciate in value, it's very difficult to understand the emotional reaction that people have to money. And one of the things I might cover off later in the program is some really interesting exercises around how emotionally disconnect or emotionally I'm not quite sure what the right word is, but we get so emotional about money, and we have some quite irrational approaches to money, and investors are the same. And so it's important for you, if you're going to be selling a solution to an investor, which is, hey, I can take your money and I can get you a better return than you can get in the bank, you have to understand the fear that they're going to have, and you have to understand the excitement or the fear of missing out that they will also have. And the only way you can really do that is to become an investor yourself. So I would strongly encourage you, if you're not already, to start being an investor, start thinking about what you want as an investor. Why are you investing in a particular project versus another project? Is it because of somebody else that's buying? Is there someone you trust that's told you about this? And is there any level of exclusivity? Do you want to be one of millions of a Microsoft investor, or do you want to be one of just half a dozen in a brand new angel deal? What appeals to you? and really start thinking about equity as being the product that you're selling, and start thinking of it as investors, as customers to that. So definitely become an investor, understand the emotions that come with it, understand around that fear and uncertainty, and also see what else comes up. What makes you choose to invest in a company? Is it hype? Is it because the media is talking about that industry? What are the things that trigger you to want to invest? Because it's important that you understand them. Now, when we started getting looking into the public market a decade ago, I remember going out looking for investor relations companies. So we were taking a company public. We wanted to build a big base of investors that would potentially work with us. And I just assumed that there would be companies out there that had very, very sophisticated marketing to investors. And if you think about even 10 years ago, the level of sophistication of marketing to retailer, to consumers, was very, very high. So these kind of the touch points, these funnels, you go from adverts, the amount of data around customers, tracking them all the way through, building trust, and then selling them a product. I assumed that would exist in the capital markets. And actually what we found was quite the opposite. There really was very little. In fact, all we were being offered was banner ads and boiler rooms. I mean, literally what we were being told as a public company is the best way to advertise your stock is to buy banner ads on investor websites, or hire boiler rooms to phone up dentists and try and pitch them your stock. And I'm not joking. That was literally what it is. And it hasn't changed much. So even 10 years later, we just did a project on a market in Europe, and again got pitched exactly the same thing: a boiler room full of individuals that will just pick up a call, pick up a phone and phone individuals and try and pitch them your stock, which just seems insane to me. But now it is starting, I am starting to see more people doing this. And this is kind of one of the things that you can start to be thinking of, is because we're moving from this idea of being transactional. So again, if you're just looking for your own balloon, you would be transactional. If the balloon doesn't match, you knock it out of the way and you move forward. There's no reason to stay connected to that balloon. But what we're trying to do is we're trying to build a network of trusted relationships. And so that takes time to build trust. And it starts with awareness. You build the trust, you engage with the individual, you understand their problems, you present solutions, you share deals, and then you prosper and repeat. Now, again, this doesn't make sense if you're just going out looking for one specific type of investor. It makes perfect sense if you're trying to get yourself a network of investors. And so we'll be talking, we're actually going to be interviewing a few people that have done this incredibly well, and hopefully it'll give you some ideas about how you can do this yourself as well. So I kind of touched on this at the beginning. Weirdly, you kind of have to be both a generalist and a specialist. So you need to be able to hold a conversation on everything from crypto to real estate to bonds. You don't necessarily need to be an expert, but you just need to know the headlines. So if you know nothing about crypto or real estate or bonds right now, or equities or whatever it is, just start finding a couple of websites that you can check in on once a week. Just read the headlines, get a little bit comfortable with the language, get comfortable with what's happening in their economic cycle, just so you can hold a conversation long enough that you could then introduce them to an individual later on. So the process really is this whole thing about having multiple deals. And I know, again, this is going to come up a lot, is I know a lot of you will be here going, yeah, that's all nice, but I desperately need to raise money for my startup, or I desperately need to get investors in to push my stock up. I understand that, and I understand that urgency. But again, kind of go back to this idea of the balloons. It's such a hit or miss approach to just be hammering people with one opportunity. Again, going the analogy of, if you've got a hammer, everything looks like a nail. What we want to be doing is we want to be building relationships. And so start to be thinking, you, of course, keep your own deal in mind. But instead of just kind of dismissing people if they don't fit the profile that you're looking for, start to understand what they're looking for. And the idea is that you have multiple deals and you have this awareness of the ecosystem so that you can connect those people and help them. As some of you may know, I have been an ambassador for a investment platform that launched probably 5 or 6 years ago called Deal Gateway. It was relatively innovative at the time. It was on the blockchain. There are hundreds now platforms like this that try and connect investors with people that want money. And it logically makes sense. Let's put everyone together on this platform and they can make babies or whatever it is they do. The reality is it doesn't work. And the reason it doesn't work is that there's lots of people out there seeking money. Investors might have a look on that platform, but if they see 2 or 3 deals that they're not interested in, they're not going to wade through the rest of the deals trying to find something that fits their criteria, and they'll never log back in again. And this is the problem that Deal Gateway had. It was very difficult to connect the right deals with the right people. So I've been looking at how do we do this? How do you make this work? I really can't see a way to make it work. But what I do think works is instead what we're trying to do here at Guild, which is this network of networks. And it comes back to that idea I talked about in the last video, that investors is such a wide category. And trying to just put any deal in front of investors and hope that it fits their criteria doesn't make sense. But if you as an individual are the individual that has all of the real estate investors in the northeast of England, for example, and then there's somebody else that that does all of the startups in South Africa, for example, and you can connect the right people to the right deals, then it becomes much more interesting. And it's because if you started spamming your own network with deals that weren't what they were interested in, you're going to lose all credibility and your network's going to dissolve very, very quickly. So we want to be hyper focused on our own niche and adding value to our investors. So the point is that you don't need to know everyone, and I'm going to show you later how you can be successful in this game even by knowing a very, very small group of people, or you can go with a lot of people. A lot of people, you tend to have less traction, but more visibility, so more chance of opportunities. Smaller groups, you tend to have more trust, more traction, but less opportunities. So, and that will just come down to your personal preference. I suggest you kind of test a few things to see what works for you. The premise is very simple. You build your own network, and you might start off very small. It could be as simple as this week or in the next week or two, just pick 2 or 3 people that invest and say, hey, I'm going to have a lunch. We're just going to bounce around some investment ideas or coffee. Come and have a chat, and we're bringing 4 or 5 interesting investors together. That can be that. I mean, that's a great way to get started. The second thing is through the Guild network and through the Guild platform is connect with other network leaders, but also you can connect with other network leaders in your city. So there's lots of investment events probably already happening in your city. So it's great to go connect with them, see whether you can help them leverage off their networks already. Be always thinking about how you can share deals and collaborate. This idea of kind of selfishly guarding deals and being super nervous about somebody might steal your opportunity. Look, it really doesn't work. I think is a much better approach is to be looking at how you can split commissions, how you can get more people involved. The more people you get involved in the deal, yes, you might get a slightly smaller slice of the pie, but all of those people will want to work with you again. And we're playing a long game here. We're not trying to do one deal and then be out. We want to be that sort of trusted resource that's constantly getting deals coming to us. So the idea really is that you become a rainmaker, that your investors know you as the individual that can bring them interesting deals. You can only bring them interesting deals when you understand the problems that they face. One of the problems that they face is that they get bombarded with deals that they're not interested in. And then you learn how to tap into networks for the solution. So everything starts with the investor need, finding deals, agreeing incentives, connecting parties, overseeing the process, so making sure that it kind of doesn't lose momentum, as deals often do. I talk about bigger deals, bigger incentives, and one of the things that I also caution on is, yes, bigger deals have bigger incentives, but you can spend a lot of time trying to get a big deal closed, and for some reason it will be derailed. The vast majority of deals do not close. It's just things move too quickly in business. Don't take it personally, or it's easy to take it personally, but don't. It's just the nature of the beast. So it's good to have multiple little deals going on at any one given time. Don't be over dependent. You don't want to be the needy person. And again, this whole idea of not being needy is kind of critical to this whole model. If you've just got one deal, which is your company, and you need money to pay salaries at the end of this month, you come across as needy, and investors don't want to ever invest in needy people. If you go to an investor and you've got multiple opportunities, it's a very different energy that you're giving off, and it makes you much more attractive. So the Guild network, I kind of touched on this before, but we've got the Guild ambassadors that sort of sit at the top and can present deals down. You can present deals up to the Guild ambassadors that come into your network. And of course, you've obviously, as deals come in, you can present them to your investors. You can cross-share deals with other network leaders. So it's constantly this idea of trying to connect the people with the money with the deals that they're interested in doing at the right time. And that's really the game. And as I said down here, network leaders, you might choose to have a really big network. So you might be focused on, hey, how do I build my social presence around being the go-to person for this particular niche? Or you might just say, hey, look, I want to keep it small. I'm just going to have a small group of trusted investors, and I'm going to be interviewing people that have done both of those approaches, so you can see how it works. I do want you to be thinking in terms of relationship, not transactional. So this idea of continuation. So we talked about the context. This is what we're covering today, is understanding that we need to be thinking in terms of building relationships and solving problems for investors, rather than just pitching our own deals. And then we go through these 5 things that I've covered off already. You're right now, if you're watching this, you're probably a member, so you're paying a monthly fee to be part of the community. We do have ambassadors. So the ambassador program, I actually started about 6 months before I started the Guild program. And ambassadors are people that like yourself, they want to build this network. They want to be known. They want to pay a little bit extra so they could be part of a mastermind group. This opportunity is still open for anyone that wants to become an ambassador. You could still become an ambassador, and it just gives you more visibility of more deals and the opportunity to share more deals and present more deals and have a slice of more deals. So it's not right for everyone, but for if this is something that you think is something that you really want to be doing at a higher level, then the ambassador program is for you. So I share a lot of my personal deals. Obviously, I try and share most within the program, but there are some things that remain private. For that $30,000, we actually give our ambassadors $30,000 in a PLC stock that is controlled by one of the groups that I'm a part of. So actually you're buying a year's worth of mastermind group, but you're also getting $30,000 worth of stock. And I'll explain how that stock goes up in a minute. You're part of a deal WhatsApp group, so it's a little bit more real time. Obviously, you get access to all the guild members and their opportunities. And we kind of have this target to try and do 100 grand a year at least in deals. Have the monthly masterminds, and we've been having some fascinating conversations. Really, I've learned a ton actually. And so individuals will bring a potential deal that they're working on, and then everyone on the mastermind group shares connections and persons. Just kind of speeds up the process a lot. There's a couple of big name guests that I'm bringing in as well. And then there's an opportunity to meet in person a few times a year. So if you are interested in that, I'll tell you how to get involved. The $30,000 in PLC stock that you get. So I mentioned in the last video, Unity Group takes companies public. So when we take a company public, traditionally what's happened in the public markets, and actually this is a good time to go into this. I'll go into it in more depth at a later point. But you remember I was talking about the fact that it used to be exciting when a company went public. It's not exciting anymore. If there's so many companies going public, and by the way, like the public markets, the stock markets are very worried because there's less and less companies going public, but there's so many options out there for investors. And if you Google IPO, everything is about how to exit via an IPO. So founders want to take cash off the table, staff want to cash out their stock options, early investors want to get out. And so if you think about it, what happens is a company goes public and everyone starts selling stock into the market. And unless you've got tons and tons of hype to soak up all of that stock, you just get a supply side imbalance. And over the last 40 or 50 years, it's been about 50% of, so 50% of companies list and go backwards. So there are less buyers than there are sellers. And so the share price goes down. In the last 4 years, it's gone up to something like 70%. So 70% of listings in the last 4 or 5 years have actually gone backwards. And it's because everybody's selling and nobody is buying. There's a diffusion of capital now. So you either have to generate a huge amount of hype to get your stock to go up, or you constrain the supply of stock. And so the way Unity Group does it when it takes a company public is everyone is locked up. Everyone associated with the deal is locked up for 5 years. And the barest minimum legal limit of stock is released into the market. Now, because investors know that nobody's going to dump on them, it's much more attractive to buy the stock. Now, there's not a lot of liquidity in the market, so a little bit of stock can move the price a fair amount. It can move it back down again as well. But it means that we can release stock into the market as the demand ramps up. So the share price can consistently kind of build up, which attracts more investors in, and then you can release more stock into it. Now, I think once you get to $500 million or $1 billion market cap, you don't really have enough control over it anymore, but that works at a micro cap and a small cap level, which is normally where companies get beaten up and their stock price is very, very easy to be manipulated by bigger traders. So all of the ambassadors get $30,000 of stock. They're locked up for 5 years, but they get to see their stock going up month on month, which is quite attractive. If you are interested in the ambassador option, and it doesn't matter at all, if you just want to be a guild member, you get access to 99% of the content. But if you are interested in getting access to the stock and the mastermind groups, do reach out to me privately. This is my email address, cl@callumlaing.com. And I'm more than happy to jump on a call with you and see whether I think you would be a good fit and you think this would be a good fit for you or not. And look, that's really it. If you've got questions already at this stage, you'll have a chance to post them into the forum. I definitely encourage you to do as much of your learning in public as possible, so in the forum, and help anybody else that's asking questions, because again, this is all about building your relationship. And so in each of the sections, I'm going to be adding more videos, so it's not static. If I meet somebody interesting that's doing cool stuff, I'll be adding videos, adding content. In this particular section around context, most of it is going to be around the context of what you need to be talking about if you want to appeal to VCs. What are the questions you need to ask? Who do you need to be talking to in private equity? You'll see I've got a video in here with Nick Bradley, who is a former private equity guy who's more than willing to spill some of the secrets about private equity, which is really, really useful. And we've got some awesome other speakers as well. And then in each section after this, content and connections, we'll be bringing in other videos as well. So you get all of the content that you need. Hopefully you found that useful, and I look forward to hearing your questions in the forum.